plan to bail out Wall Street. It's even harder for a lot of us to imagine what it could mean for our lives, our families, even our children. Here to offer some help is Dallas financial advisor and planner Ed Butowsky of Chapwood Investments. Boy, guest of honor, thank you so much for being here.
You're welcome.
We could start so many different ways, but let's start with what you make of the current financial situation. How dire a straits are we in?
Absolutely, probably the best way of saying is far from it. We're not in a dire straits position, and I'm actually at the point where I'm just sick of looking at these headlines.
Okay, tell us why.
I mean, the other day in the Dallas paper, there was a picture of a man with his hand on his forehead, and the headline said the Great Depression, okay? If you really want to know about that man is not allowed to own any stocks. He probably just got a phone call from his wife telling him that dinner was going to be late, okay? And
Ouch, Ed, don't pull any punches here.
But we're getting to the point where this thing has taken on a life of its own, just like we're calling it the bailout. What are we really doing? We're taking, the proposed plan is to take these assets and almost pick them up and put them into a garage sale. And we might end up actually profiting from this. That's actually what is taking place. This is never, with the number of $700 billion, that does not necessarily mean that we are going to end up spending $700 billion.
Who are you referencing that might actually end up profiting from this? Because I would guess, despite what you said, there are a lot of taxpayers out there thinking, oh, I'm not going to be prospering from this, however this plays out.
Well, it's the government.
Okay.
And the government then ultimately is us. Okay, they're going to take those assets, put them over here and manage them. And as long as people continue to pay their mortgages and continue to pay their notes, everything is going to work out absolutely fine. They're basically just taking it off the table, moving it over to the side, and unclogging, as the president said last night, the system, which needs to be unclogged. Quick thought. How many mortgages do you think, or how many houses have been foreclosed? I asked a bunch of people before I came down here today, how many mortgages do we think are in default, and how many houses? They were saying 30, 35. It's 2%. 2% of the mortgages as of right now are failing. Now, a big question comes up is, how did we get here? I mean, what is the problem?
Right.
And how did only 2% cause this? What happens is somebody goes and gets a mortgage. They take that mortgage, these companies, and I'm just going to use Countrywide as an example because people know that one.
Okay. They
take this mortgage and they securitize it, meaning that they actually bundle it together and they sell it. So they take this mortgage and they sell it over to a financial firm. That financial firm then turns around and sells it off. This has been going on for years and years and years. Fannie Mae and Freddie Mac would back those, which means they would be government guaranteed.
Okay.
A hedge fund or some other financial institution would buy them, and this is where the problem began in terms of the securitization, is that they would take that asset and leverage it. They would borrow against it, and you could borrow 10 times against that. So if you bought something for $1, you could buy $10 of something else with that. That was absolutely fine as long as people continued to pay their mortgages.
Okay.
Second they stopped paying those mortgages, everything started to crumble. And that's why we saw this happen. Now, there are headlines after headlines about how terrible this was.
Yeah.
All right, let's go back to AIG. AIG was the one company they had to bail out because AIG basically backed most of the exotics and other things in our business.
Okay.
And if they did not take care of that situation, we would have had pain that people could never imagine. So, and that's what had to happen. Lehman Brothers, it's very sad. I had friends that worked there, but that was not a major financial problem for this country. Merrill Lynch was having some issues, but they had issues even before that. So they were always looking to merge with a commercial bank.
Okay.
And Bear Stearns, you know, there's been a lot written about that, but a lot of that had to do with just a panic and people pulling money out of Bear Stearns, and that caused the problem with them.
So several different problems you're pointing out. Each one was, in its own right, a different issue.
Right. And what's happened as a result of this is you have people who are talking about it, which they should, but they're talking about the wrong things. What they should be talking about is what really moves a market and what really is what is it about investing that is important to them. And what matters about investing is inflation and earnings of companies. That's what moves a market. So take this bailout or this SOS as we've talked about, or whatever it might be, put that aside. Now, what do people have to do? And my biggest fear for people today is that they misunderstand inflation. Okay. The government puts out a number, and whatever that number is, it probably does not pertain to most of us and most of the people watching right now. And the reason I say that is the government might put out a number saying that the cost of living is going up by 5%. And I encourage anyone watching right now to start thinking about how much it costs them to live today versus how much it costs them to live 5 years ago. It probably has gone up a lot more than what inflation, the actual inflation number is. So what you have to do is say, am I going to educate myself and learn how to manage my money properly and offset the negative impact of inflation? Because inflation to most of us is about 7% a year.
Okay.
And you have people who are going out because they're afraid, putting their money in a CD. So let's play the game. 3.5%, or we'll even go 4% on a CD, subtract 7%, now take out taxes, and you're losing about 3% or more purchasing power year over year. And what we're going to do, if people don't learn and they don't educate themselves, we're going to wipe out a whole generation of investors. Then we're going to have some real problems, okay?
How should people educate themselves? Apparently, in your mind, it's not reading the headlines, watching TV, listening to the radio in all cases. What do you recommend people go out and do if what you're saying resonates with them? How do they learn more in a way that is impactful to them?
And I'm seeing that as the biggest problem in my industry, because I think a lot of people in our business don't understand the business that well.
Okay.
And I think it's something that I'm going to continue to go out and give a lot of speeches on. One of the best ways of doing it, and you know, we all say go online. Well, there's a website called Investopedia.com.
Okay.
Investopedia.com. I think that's excellent. But they should remember that they're investing for total return, and they should have a very small amount of their money in fixed income investments. They need to have growth to offset the negative impact of inflation, and they need to understand it. And a quick little footnote. There's a term going around in our business now called BRIC: Brazil, Russia, India, China.
Okay.
And we have yet to feel the real impact of those countries and the demand that those countries have on our resources. Whatever it costs you now to go and feed your family, and we'll just throw out the number because I believe the number is correct, it costs 12.3% more this year to feed your family than it did last year. Why is that? Because there's so much demand for beef, corn, and some of our resources. It's only going to get worse as the years go on. And you cannot put your money in fixed income investments alone. There has to be a combination.
Thank you so much for your, I hate to say it, unusual take right now, but it is right now. You're telling us to think outside the box and make sure we know what we're talking about and listening to.
You pay a dear price on Wall Street for consensus.
Thank you so much for being here, Ed.
Sure.
Next on DFW Close Up, details on today's guest and a sneak peek of next week. Stay with us.